Welcome to Looking at the Markets with David Moadel. If you're a buy and hold type of investor and you have some money saved up in your account, enough to purchase at least 100 shares of a stock or ETF that you like a lot and that you want to buy and hold for months or even years, but you're concerned about the possibility of a stock market crash coming, which perhaps you should be. Right now it's December 1st, 2016. The current bull market that we're in, it's getting a little bit old. It's an extended, older bull market, about 8 years now. And so a market crash could happen this month, this year, next year, we don't know. So if you want some downside protection, there's actually a way that you can protect yourself against a market crash or a stock crash for free. In fact, you could even profit a little bit. So how do you do this? Well, there's a strategy with options, and it's called a collar. A collar, okay? And so what you do is first you purchase a put option. So right now it's December 1st, 2016, and let's say you want to protect yourself for the next month, okay? So and right now we're using SPY, which tracks the S&P 500. It's an ETF, but you can use anything that you want to buy and hold. It could be whatever. It could be the Nasdaq, the Dow, Russell 2000, or a stock. It could be Apple, whatever you want to buy and hold for a while. Now you have to purchase at least 100 shares of the stock or ETF, okay, in order to do this. And so this is for people with perhaps medium or larger accounts. All right, so and this is something you can do every month or every couple months. However often you want to do this. All right, so let's say I want to do this every month. So it's the first of December, and so I'm going to pick an expiration a month out. So December 30 on SPY. Okay, now how much protection do I want? How much downside protection? Well, right now, let's see, SPY is trading at around 219.5, let's say, and I could tolerate. If it went down, if I bought it now, if I bought 100 shares right now, if there was a market crash and SPY went down to 203, that's about as much as I could tolerate financially or emotionally. All right, and that's about, what's that, about 7.5% down. Let's say I could handle a 7.5% loss. Anything more than that, I wouldn't be too comfortable with. And you have to decide your risk tolerance. Maybe you could handle a 10% loss or only a 5%. All right. So let's say I can handle a loss down to 203. Anything below 203, and I want protection. All right. So I'm going to pick that strike price, and I'm going to purchase a put option. All right. So I chose 203, but you can choose whatever strike price below the current price you want. Okay, and so right now that would be about let's say $48. And so for the next month, up until December 30th, if SPY went down, even if it went below 203 during the next month, I could still sell those 100 shares at 203. Even if SPY went to 200 or 195, 190, even if it went to zero somehow, I could still sell my 100 shares at 203. Okay, so now how is this free? Well, it's not free yet. Now, right after you buy the put, okay, so this is $48. Now we want to sell a call to pay for that, and we're going to collect some money when we sell the call. And the call strike price is going to be the same expiration date with a strike price above the current price, above 219.5, let's say. So we have to remember our call has to be at least $48 in value. Okay, so let's see. Let's try 225. Can we get $48 for that? Not quite, pretty close. Let's try 224. Very good. Okay, so if we sold this one, we would collect 67, let's say $68, something like that, and that would pay for the 203 put, and we would even make a few dollars. How much money would we profit? Well, let's say 67 minus the $48 we paid for the 203 put option. So we'd make a few dollars. Okay. Now, of course, there are commission costs, so we wouldn't make a lot of money, but we would probably still profit a little bit. At the very least, this strategy will be free. Okay, it won't cost you anything. Now, there is a price to pay, though, in terms of your gains for the next, your potential gains for the next month or until expiration, whichever expiration you choose, will be limited. There will be a ceiling or a cap. Your profits will be capped for the next month. So, and any gains over 224, you would forfeit. You would give up. But you would still make money from 219.5 all the way up to 224, which is almost a 2% gain in that month, which isn't bad. I mean, if you're into buy and hold, if you make 2% per month, that's 24% a year. Making 24% a year on a buy and hold strategy, that's pretty darn good. Okay, even if you make 1% per month, that's 12% per year. You're doing better than a lot of people with that strategy. Okay, and so, you won't be hitting any home runs here. If SPY went to 225, 226, 230, whatever in the next month, you would only make money up to 224. Any gains beyond that, any profits beyond that, you would forfeit. But you would this would either be free, or you would collect a little bit of profit from the sale of the call, minus the price of the put, which in this case was around $48. And most importantly, you would have downside protection. If SPY went below 203 in the next month, you would be protected. Okay, below that, you wouldn't lose more than, let's say, around 7.5% in that month, even if the market totally crashed. And you can rinse and repeat this every month. So when the call and the put expired on December 30th, the next day, or even on that day, you could purchase another month out and buy another call. Buy another put and sell another call to pay for that. And this is free. It's free crash protection, so you can sleep at night soundly. And yes, you'll limit your upside, but it's still slow, steady gains. And if you're a buy and hold type of investor, then that's what you're looking for. All right, so I hope this strategy, the collar, is useful and helpful to you. And if you like this video, if you find it helpful, please feel free to send me an email. You can email me at any time. My email address is davidmoadel@gmail.com. You can also email me if you want to put together a trading plan or investing plan, or if you have questions about stocks, options, and protecting yourself against market crashes, things like that. Feel free to email me. Also, if you like this video, please give it a thumbs up on YouTube and leave comments. I really like your comments a lot. And please subscribe to my YouTube channel so you can receive the latest updates on my financial educational content. Thank you so much for watching this and for listening, and I'll talk to you soon.